Thank you. It's a pleasure being here. I think the broking industry is going through very rapid changes. COVID has accelerated the changes in many, many ways and probably brought their own changes, which we had not expected before. Whenever I look at the broking industry today, it reminds me of Charles Dickens' book, The Tale of Two Cities. It was the best of times and it was worst of times. So I think in some ways we are going through both. We are going through the best times for broking industry, and we are probably going through also the worst of times in many, many ways. In terms of the best of times, I think all of us know during COVID time, India has done wonderfully well. It has had very little infection vis-a-vis what happened to the rest of the world. It also has less number of deaths per million vis-a-vis rest of the world. So I think India has done wonderfully well. It has also become a vaccine capital of the world. It has also handled its financial system well, and also it has handled the back office for the rest of the world. So I think overall this is a time of reckoning for India. But if you look at the Indian broking system or broking industry, it has also seen tremendous growth in last 1 year alone. BSE has seen more than 29% increase in the number of accounts it has. BSE now has 6.15 crore accounts. And if you look at the unique PAN numbers, it's around 3.8 crore, that is 38 million unique PAN numbers, which are available with us in our system. This is pretty much the largest, including all mutual funds, any exchange in the country, any depository. We are pretty much double the size of any nearest competition in terms of the number of investors registered with us. And that is, I think, very heartening. Why this has happened is people have come from all over India to register themselves on the broking platforms. And because of the COVID lockdown and other things, they've started interacting with the broking systems. They've started trading on them. And so now we have pretty much grown by 29% in one single year. I mean, it took us 145 years to reach 4.5 crore or 45 million accounts. And in 1 year, we have gone to more than 6.15 crore or 61.5 million accounts. So that's a heartening story in many, many ways. And I think the trend will accelerate in terms of the number of people touched by the BSE and Sensex and everything put together. I estimate somewhere close to 30 to 35 crore people, including our own 3.8 crore PAN number, unique PAN number, plus the people who are indirectly investing into the stock market using the EPFO's ETF framework. Put together, we are directly touching probably 7-8 crore. And if each house has 5 people each, we are somewhere between 30 to 35 crore people being touched. Many times there has been complaint and even a perception has been created that Indian markets support very few lakh investors. In fact, last week also during budget discussion, one of the important anchors of a general sort of general news channel told that now that budget is good, a few lakh Indians will be happy. It's not few lakh, but literally 35 crore Indians have started investing. And of course, we need to go to 140 crore people. So we still have 75% people to touch. And even the people who have been touched in terms of the 35 crore people, many of them need to start trading on BSE going forward. So that I think is a second level of problem. But overall, I think it's a happy situation to be in for the entire broking industry, that our numbers are increasing, trading volumes are increasing, the customers are trusting us more. We have provided a tremendous amount of liquidity services to the entire country when it was needed the most. The stock markets never closed even for a second. And I think that is also a testimony to the technological prowess as well as the trust people have and the importance the government has given to the stock broking. In terms of the worst of times, I think all of us know so many brokers have defaulted. Some of the largest defaults have taken place over last couple of years. In last year alone, as per the newspaper reports, more than 20 brokers have defaulted with a varying degree of or varying amounts of defaults from say 2 to 3,000 crore in Karvi to even 100 crores. And so there are different varieties of investors who have suffered a lot when their brokers have defaulted. The SEBI and the exchanges have been trying to provide the IPF investor protection fund to the extent they can. But overall, it is a difficult situation. Why it has come to this stage where so many brokers, pretty much the largest broker defaults, and the largest number of brokers are also surrendering their broking memberships, at least in one of the larger exchanges. What we have seen is because of the fact that the broking industry has become very, very cutthroat in terms of the commissions they are able to charge, because the larger brokers there seems to be a race in collecting the number of customers and making them trade. The charging on a traditional basis by way of the commissions or brokerage, as we call it, has come down pretty much close to zero. In fact, there are other brokerage houses which are playing on that, and I think that trend we have seen when in 1991-92 the official brokerage itself was 2.5%. On top of that, sub brokers and other charges used to be very large, and now it has come down to close to zero or a fixed cost per month or fixed cost per year, and that is affecting very small brokers who are not able to sustain their operations, and due to that they either end up taking the customer money on basis of discretion, and they may end up losing where they go belly up and go default, or they try to surrender. Whichever way, I think it's going to be a tough situation for many small brokerage houses unless they kind of catch up to the technological changes that are taking place and the ever-changing compliance route based on this defaults and other things. The regulator also has to act, and that's where they are making many regulatory changes, which are also requiring technology to change, the back office processes to change, front office processes to change. So I think there are many changes that have happened over last 1 year, but there are many more changes that may happen due to the way the difficult situations are coming up from the broker side specifically, especially defaults. In terms of the algorithm trading, I think it has become even more overwhelming than what it was before COVID. So although many people have joined the markets, the algorithms are even larger in terms of their presence in the markets, the arbitrage, non-arbitrage, even eating up of news on automated basis and placing orders. All these are pretty much prevalent in India. The risk management is becoming very important for brokers and exchanges. Surveillance related issues, financial intelligence unit related reporting, PMLA and other things are also becoming very important for brokers to keep track on. The technological changes and the cost are also increasing manifold because of the incessant changes that are happening due to competition as well as to the compliance requirements and the regulatory changes. In addition to the new products that are coming, a lot of products have started coming into Indian markets, including commodities, which had separate markets. Now you can trade them on BSE also. And now BSE also offers even agricultural spot market under a new platform called Beam. BSE also offers mutual fund distribution where almost 1 crore transactions per month are happening. Almost 1/3 of all transactions in mutual fund are happening through BSE Star MF platform of BSE, which has become extremely successful, very low cost for everyone, and very automated. And similarly, BSE has also started recently insurance distribution, where the brokers may be able to give, or their sub brokers may be able to give even the insurance related activities in general, life, health, auto, anything you can think of. So overall, the trading part, where the numbers are increasing, at least for the public consumption as an aggregate basis for exchanges, is a heartening news. But at the same time, it's not evenly distributed. So some of the larger brokers are capturing larger market share. Smaller brokers are trying to move out or are declaring defaults and putting a lot of other people in trouble. At the same time, the algorithms are becoming hugely effective and hugely important, not only in India, but across the world. The brokerage rates are coming down. The new products in form of the insurance and uh, the mutual funds, the derivatives, the commodities, currencies, everything is coming. And for me, sometimes it may look very confusing for brokers, especially the small time brokers, how to handle it, how to comply, and so on and so forth. But that is going to be the pace at which India is going to change. Probably even further changes and faster changes may happen. So we need to tighten our seatbelts and ride through this moment. I think, as I always say, that broking is like riding a tiger. The ride is very uncomfortable, but if you get down, it eats you up. So you need to continually be in search of newer things due to competition, due to technological changes, due to regulatory changes, due to compliance requirements, and many other things. So with that, I wish all the brokers of BSE and everyone else associated with this industry very, very best for the year 2021. And also think that all of us need to work very hard to stay at the same place. Thank you.
It was a pretty exhaustive speech. Actually, you have captured the best and the challenges of the industry, and very aptly said, it's like riding a tiger. You have to keep riding, because the moment you get down, you have a problem. But from the broking industry perspective, worldwide technology is actually removing the intermediary or the middleman from every aspects of our lives, isn't it? So will brokerages then go out of the system at some point, or how do you see it evolve over the next 5 to 10 years?
So I think this I have been telling for last now 25 years, since I set up NSE in 94. So now it's 27 years, that the volumes are going to grow up because it becomes easier because of automation only to do it. But the other side, the brokerages are coming down, and pretty much you have to continue to add value in other areas. So the broking at earlier stage, when say 30 years back, largely used to add value through the floors, by going into the floor and getting you the best price. Now that is pretty much eliminated. The entire value addition has been eliminated by creating a single virtual floor across the world for all the investors of the world. And so that portion which broker used to add has gone. But some of the other areas which they used to add on value remained over last 20, 30 years, because the technology had not changed that much in terms of the back offices, in terms of the risk management, in terms of settlement timings, aggregation and all. So many of those things are also slowly going to go away. The way the floor went away, many of the value additions the brokers were doing or brokers are currently doing might go away, which will mean that there will be newer exchanges may come, which may allow directly the customers to trade on the exchange rather than going through the brokers. Or many products may come which may not require the brokers to be there, or automated brokers, like many brokers today don't even touch anything. It's a direct to market kind of orders. And so there is no physicality of a broker. And so once you put the machine doesn't get tired, the machine doesn't get confused. It does exactly what it is told, day after day, minute after minute, second after second. And so there is basically the human value addition in many areas are going down. But the other side, there is the wisdom side about where to invest, how to invest, product distribution side, because trading is not the only thing in the stock market. Ultimately, you need to have IPOs, you need to have somebody taking you through that, somebody basically explaining to you the businesses. And so the portfolio management, you can see so many people starting their portfolio management activities and actually becoming successful. There are many new mutual fund distributors have come up who we had not even heard of 5 years back. But in Star MF, there are at least 30, 40 mutual fund distributors who have got literally 20, 30, $50 million of funding to basically do distribution on Star Mutual Fund itself. And so newer businesses are coming up, newer style of businesses are coming up. And that's what every broker will have to figure out, that it's not the traditional part which we are used to, probably you are doing as a family business for last 100 years, 120 years, is going to remain the same. No, it has actually changed drastically in last 25 years. But in next 25 years, it's going to change completely. And so you need to be ready to figure out where you are good at, how you can add value in newer ways, experiment, and see whether you are successful, able, and not only successful, able to actually derive some additional margins for yourself, because you can be successful and still not have commercial value coming out of it, right? And so these are all important issues which each broker needs to worry about, think about. Even existing successful people also will have to think how the new breed which is coming is going to eat your lunch. So it's going to be very, very tough ride for everyone.
Right. Sir, you talked about directly to the market. So are you at some level hinting that a direct market access kind of thing will become a reality for retail investors at some point?
In a way, it has happened. See, today also, when you place an order on a website of ICC Direct or a Zerodha or somebody, there is no human involved. Right. It's going straight into the exchange, and so there is no human involvement. Now, is it that the brokers have to be always there in the middle? Probably no. In fact, there was some news item in ET itself, I think 6 or 8 months back, that there is some movement on considering a direct kind of involvement. And so it remains to be seen. Like in currencies, banks as customers participate directly. Similarly, in mutual funds, many large corporates participate directly as customers. So there are instances where the brokers are not coming in those particular areas. But slowly, even technology goes forward, you will see even the regulator experimenting with many such things, if not in India, abroad, and we have to be ready. See, India has been a pioneer in thought process relating to automation of stock exchanges and the entire ecosystem for last 30 years. And so many things which have come out of India, then rest of the world, even screen-based trading was not so screen-based even in US or Europe even 25 years back. We became successful. That's why they went into screen-based trading. And so we have been pioneers in many ways, and we have maintained our leadership in terms of the technological thought processes. And probably, who knows, if SEBI allows, now they've also started Sandbox, where the new technology companies are allowed slightly lower regulatory burden to experiment newer things. So you don't know what the regulators will allow next, and every broker has to be ready. I don't see nobody will, like BSE and other 22 exchanges were existing before NSE came, and in a year's time NSE took away a lot of market share, right? So it's not a given business that it remains yours. We will have to, all exchanges, all brokers will have to continue to evolve based on new regulations, new technology, competition, compliances, everything continuously.
Right. You also said that the brokers should probably try and continuously diversify their product offering. But the problem there is, in terms of regulation. Now, if you want to sell, you cannot advise, that's the regulation. Or if you advise, you can't sell. Even in terms of the fee that you can charge, there's a cap on it. So how does one create a sustainable business in such a situation? Do you think that there should be some easing of regulation somewhere there? Because there used to be an industry, and that industry is now shrinking like very rapidly, and that community, doesn't have a very bright future looking forward.
No, I think you are right in a way that the regulations have come, regulators and regulations have changed drastically and have been changing very, very rapidly, which has affected some portion, but that also required the industry's feedback, because many of the feedback the regulators got about the advice people were giving and churning the customer portfolio into NFO again and again and again 10 times in 1 year, taking away 20%, 2% per round, and then at the end the customer is left holding with 80 rupees when he started with 100 rupees, because the advisor took away the distribution money. And so that's how they had to come out with this, if I recall correctly, the way Mr. Bhave had explained in 2011 or 12, why he had to do this. And so I think a bit of both is required, a little bit of changes in the regulations, but also the sort of reliance on only commissions coming out of the mutual fund industry. Instead, the SEBI wants you to earn directly from your customers. And if you're adding value, nobody will have an issue in paying you, right? And so that's where I think that was the argument Mr. Bhave had given. And I, even after probably 10 years, I still think they must have come across something which made them take that sort of stand, right? And despite that, the industry has grown many-fold. So it's not that industry, many of us thought industry will stop growing after that because there is no incentive for the people to subscribe. But in fact, because the industry became so tough in terms of the customer money, that now industry has actually grown many-fold, which nobody actually expected. And many mutual funds have gone up 10 times, 100 times, you know. So for me, each sort of activity has many sides, but I do agree that we require some amount of handholding in India, and the regulators probably can sort of look at it or relook at the entire thing with some more controls and other things going forward.
Also, you have mentioned time and again that the regulatory changes have been very rapid. In terms of from an industry perspective, do you think is there a kind of a wish list that SEBI should probably put out a roadmap that we are going from here to here? Because then probably you make the industry ready for those kind of changes, because the things like like the margin issue and all those kind of things, it has been a kind of a big setback, at very not very opportune time.
It's very similar to the farmers' agitation, that last 25 years it has been discussed, and when it comes, people start agitating because they don't. They want all the benefits, but they don't want the attendant or consequential other issues. Similarly, even this margin thing, it was very well known that some brokers are misusing and the system allows you to misuse. Now it was up to the broking industry, and it's not today's, last 25 years this has been discussed. And everyone hopes that it won't come tomorrow, it will not come in my lifetime, and so on and so forth, right? But when Karvi happens, when Anugraha happens, the regulator has to act, right? They have actually waited for very long. If you look back, it is not sudden at all. It's not, it's almost similar to the Farmers Act and the Farming Acts. It may look like today it has come, no. And still the amount of time that is given, the discussions that are done, literally on NSE side and later on BSE side, I have been party to this many years, so I know some of these issues which are being now undertaken are actually 25-year-old, and no media is talking about it. See, again, media also has to have a path. It cannot be only the regulators. The regulators have to act based on the realities they face of the invest. Ultimately, their job is to protect the investors, right? And so they will have to look at it. But even onus is on exchanges, on the broking associations, the broking groups, to say that this can be potentially misused. So let's try to change SEBI, and we give SEBI the forward path to reform ourselves, right? And that we don't want to do. But when somebody comes with the regulations after 25 years, we want to blame them. And that's where I think somewhere at the same time, whenever SEBI does anything, I have not seen things happening in one day. They go through a tremendous amount of discussions, debates, consultative papers, public opinions. Over last literally 12-15 years, I have not seen them a single regulation which has come without that. Even the most urgent stuff also, they try to go through that process to make it a little more exhaustive. But somewhere in the line, I think onus is on all of us that we service the clients, our brokers and ourselves. And if they have a problem, if the clients have a problem, investors have a problem, we need to anticipate, tell SEBI that, okay, this is the regulation. We want you to come to reform us. And that is, I think, should be the way that what is our broking industries, or what does the media, business media thinks about broking industry's path for next 25 years. Let's see. Yeah. You guys also watch us.
Good point. Good point. Sir, you mentioned Karvi episode, and of course, it is still under regulatory purview, scanner. But the perception in the market is that probably the stock exchanges may have turned a blind eye and let things slip out of hand, or let's say maybe fail to see through what was going on. Can you give us some perspective where things really went amiss?
In what sense?
Kirby, in terms of some say that the stock exchanges were probably aware of it or probably were not very strict in enforcing the discipline.
That's why I'm saying, see, the exchanges basically follow the regulations. If we try to be more stringent, then brokers or the users can complain. And similarly, if we do it less, then the SEBI would take us to task. So there is always a fine line that any exchange needs to maintain. Frankly speaking, if you look at the last 20 defaults or last 30 defaults, you wouldn't see BSE's name there. Any sort of customer money going away, you will not see BSE's name there, because BSE is hugely stringent compared to anyone else in the economy today. But that also tells us that because we are so stringent, our volumes are less. And that's why same people who are asking me this question, like you, will say, though, but you are not as successful as the others. Because we think ultimately the investor money is sacrosanct. And that is the holy grail of our industry. Trading volume cannot be a holy grail, right? And so for me, and similarly, making people trade incessantly cannot increase the wealth of the nation. Wealth of the nation can increase only by investing in good companies and their profits going up, not by trading every day for like lakhs of crores or 40 lakh crore and 50 lakh crore a day, right? And so but the media gets excited about it. People get profits, brokers get profit out of it, exchanges get profit out of trading, not out of the India creating wealth, right? And so there is a dichotomy. And how do we create that framework where what is good gets remunerated and what is not so good gets blamed? But it doesn't happen, right? And I think some blame, as much as exchanges have to take, I think media has to take also, right? That I have not seen much incisive comments from anyone on many scandals that have happened over the last 10 years.
Right. I have run out of time, but one last question I have to ask you is that there is a lot of talk about how this new margin rule affecting volumes and this Kirby episode. And of course, we have plenty of new investors coming in. But at BSE, last time we spoke, I think you said that you were turning BSE, taking it beyond being a stock exchange, probably into a fintech company. So in terms of your own bottom lines and top lines, you have kind of immunized yourself from this volume fluctuation?
In some ways, it's what I call a path. It's not that we have reached a destination. And it will take some time for us to become a little more robust than what we are. But today, this year, we are doing very well compared to what we did last year, for example. In terms of the operating results. Also, we are continuing to invest in newer areas like India International Exchange, which is in Gandhinagar Gift City, in our insurance platform. Our IPO platform is now very large. Almost this year alone, we have raised a 15 lakh crore as BSE from equities, debentures, bonds, commercial papers and all for the corporate India as well as governments and municipalities, right? And so our IPO market, our mutual fund business is now exceedingly strong. And so we are, as you said, we are going into newer areas. We have just started a agricultural market for spot based on the new farm laws. And we just are in the process of starting a new electricity spot market with Power Trading Corporation, for which we have now got the approval after 2-3 years, and also with ICICI Bank. So 3 of us have jointly decided to start this. It took us 2-3 years to get the approvals, but I think by this year month end we should be through with that. So probably in the next few months you might see the trading in one of our associates in power also. And so we are slowly getting into larger number of areas, more remunerative areas for us. We are also taking our brokers, smaller ones, even the larger ones, into areas which they have not thought about going into before, by providing a organized platform for them. And we, of course, do everything with the approval of the regulator. We don't do anything which regulator doesn't approve or doesn't want us to do. And so it remains much slower than what we would want them to be, or much smaller number of areas than what we would want ourselves to be in. But I think overall the flexibility that SEBI has granted us has been phenomenal. And we have also worked hard as a team to develop those technologies which we are able to, PCs which we are able to fit in as and when the new products are allowed. Like commodities, we started, now we have become the second largest commodities markets in India, right? Equity derivatives are also doing very well in BSE itself, but also in GIFT City. And GIFT City now, INX, India INX does 3-4 times more volume than Singapore Exchange in Nifty. And so it's just that again, media doesn't see it at all. And so many things for us. I take some of this opportunity to also sort of make people aware that look at GIFT City also, which is now becoming very large. Even in gold, the GIFT City INX, India INX does more volume than DGCX, for example, right? And so there are more interesting things happening for BSE. And it has become a very robust organization in terms of technology, in terms of finances. We also kind of deflated our balance sheet by huge margins over last 3-4 months. In the last 3 years since we got listed, we have given up almost 1,500 crore rupees from our balance sheet to our investors by a buyback or dividends. And so we are basically trying to use our capital more efficiently, keep only the money which is required, and still get into more areas, more businesses, and hopefully, who knows, some of them like mutual funds might become blockbusters.
Absolutely. Wonderful, sir. Thank you so much for your time. And
Thank
it's
you.
always good to talk to you about the market. And you have been
Same here, sir.
one of those leaders who have seen the market grow through from probably 1,000 to 15,000 on Nifty and Sensex. I'm not sure. I think you would have seen it from maybe 2,000.
Yeah, probably in that range, 1,000 onwards. Yeah.
Yes, 1,000.
But Nifty was created by me.
Yes. So
and even Nifty's predecessor called NSE 100 was created by me.
Right. So no better than you to talk about all these issues. Thank you so much for your time, sir. Thanks.